Okay, so welcome again. I certainly appreciate. I did not think about it being election night, and if you will, I'll monitor the chat um, as we go through this. But I'm going to be very cognizant of your time. I scheduled an hour. It probably won't take that long. And if there's anything you would like to for me to discuss further, raise your hand. Type it in the chat, and I will do my best to get to those. But again, I'm thrilled you're joining me tonight. You know, I'm not new to Zoom itself, but I am new to the functionality of teaching this way. So if you would, in the chat, let me know where you're located. I'm so sorry about that. I was talking away thinking that I was on, and so you didn't get to see all my mistakes. But thank you so much for being here. I love. I'm a little bit of a nerd when it comes to numbers and the market, and I study it. Um, I'm not new to Zoom, but if you don't mind, let me know in the chat where you're located. All right. So as we get going, I'm going to kind of give you a little background, tell you a little bit about uh, my why. And, this is my 23rd year in the business, and the last 2 years have been tough, but there are lots of negativity in the marketplace that honestly shouldn't be there. You know, fear gets clicks. So that's what news outlets go to first and foremost. So I'm going to try to dispel some of those rumors. I'm also going to tell you a little bit about me and my why again. So this is my why, plain and simple. I have 4 children, ages 17 to 8. Beautiful wife who puts up with me, and I'm appreciative so much to her. But I want this to be an interactive webinar. So like I said, if you have any questions, raise your hand. There's a little raise your hand button, or you're welcome to come off mute and just ask. I want this to be informal. So I got a lot of good stuff to go through, so let's get going. So if you're here, you have a desire to understand this market and really start taking control of the financial future. What a lot of people don't realize is real estate outperforms the S&P 500 stocks twofold. There are good times to buy. There are great times to buy. There are times to sit on the sideline, and depending upon each individual situation, you're going to be, that's my job, is to help build a strategy. So this is going to lay out some of that. The headlines in the news, as I mentioned a minute ago, they're a little intimidating. You can't believe everything you hear. Clickbait is very real, so they want to draw you in with what they call a hook in that world, and hook you in to get you to come to their site, which they can sell advertising to. So this is not going to be just, 30 minutes of your time wasted. I really feel like that I'm going to go at a very fast pace, but I've tried to make it where the everyday person can understand. So you'll learn some strategies that could be the difference between your frustration and financial freedom, as I stated. So stick with me. You'll be more confident when it's over. So we've all seen the news. Interest rates are climbing, home prices up and down, higher, and the main thing is limited inventory. So, and that's across the country. So sometimes it feels like the deck's stacked against home buyers. But, I talk to home buyers every day. I'm still in the trenches doing loans, and sometimes they just feel stuck. They're somewhat paralyzed by the fear mongering in the news. So a lot of people are questioning, is now a good time to buy or refinance? And let me tell you, everybody has an opinion, myself included. But with that being said, I don't want fear to drive your decisions, because fear and uncertainty certainly can be very costly. It leads to hesitation, missing opportunities, and decisions made out of desperation, so to speak, and not strategy. So, but I want to show you a couple of ways to kind of cut through the noise. I want you to have, sorry, I stand when I work, so my desk shakes a little bit. Imagine having a crystal clear game plan that shows you exactly how to maximize your buying power, or when is it the right time to refinance if you own a home, and make sure nobody's waiting. Okay. Not only are you going to increase your buying power, know when it's the right time to buy, refinance, whatever, but also I want to teach something that a lot of people don't talk about, and that's building wealth through equity. And I'll explain a little bit more about that in a minute. So by the time we're done, you'll feel confident. You'll be more confident about knowing where you are, or having a framework around where you are. So let's be clear. I'm not here to sell you anything. I'm not here to rush you, anything. I'm here to educate. And that's solely why I'm here. A lot of this technology, I'm younger, but it's new to all of us. So I want to give from the experiences that I've had, the mistakes I've made, and being in the trenches every day. I feel like I have a lot to help people, because many people don't know about the home buying process in general. So I believe in doing things differently. As I said, I've been in this business for over 2 decades, and real success comes from education and empowering people to make smart decisions. I certainly am not about a transaction. I am definitely long-term thinking. I want, what we find in this business is a lot of people don't, if they have a financial plan or a budget or whatever, the mortgage is only part of that as a commodity, meaning it's only part of it as the payment. But I want to change your thinking on that. So this is designed to give you real value. So it's time for those that are serious about home ownership. It's time to stop being reactive. In other words, I'm going to wait till rates come down and then buy, and be proactive. So that helps us let us dictate the market, not the market dictate our decisions. But you got to understand key steps like preparing financially to secure the best rates, knowing when to get pre-approved, and using your home's equity strategically. This shifts the perspective and it changes everything. This shift in perspective changes everything. So you'll stop feeling at the mercy of the market and feel more in control. So here's what we're going to dive into. A quick overview of where we've been this year in the housing market and some real-time data that's from today. Then we'll get into some home buying strategies for people to make the smartest decisions possible. And after that, we'll talk about homeowners and the often overlooked opportunities for leveraging your equity and refinancing. And then I'll answer any questions, be happy to. So if you can hear me and everything, you can see the slideshow. If you don't mind putting a yes in the chat for me. Moving on. So we talked about what we're going to cover. So it's definitely an understatement stating that 2024, really 2023 and 24, has really been like no other. And I mean that by charts, by the numbers. Interest rates are at historic highs. Inventory is certainly tight. And when rates dipped last time, it was 2 and 3 multiple offer situations, and that just drives prices up even more. And, today is a big day. Obviously, we get to exercise our constitutional right to vote. And, but in the mortgage world, it's a big week too. So right after the election, we'll be hearing again from the Federal Reserve on them possibly cutting interest rates. Now, I believe it's a foregone conclusion that they're cutting a quarter. Pretty sure that it'll be a half, maybe more. But it's fair to say that that's got a lot of buzz right now. So as we move forward, I'll touch more on the Federal Reserve Fed funds rate in just a minute as well. So here's where we've been in 2024. Interest rate wise, it has been extremely volatile. And, there was a lot of buzz in September where I've got circled right there, right here. That's September the 19th. That was the date of the last Fed rate cut. So everybody thinks, oh, the Fed's cutting rates and mortgage rates are going to come down. So they're sitting on the sideline the uncertainty of the election certainly has them sitting on the sideline. So, like I said, the Fed is likely, I think it's a foregone conclusion that they're going to cut rates by a quarter percent. And that's going to have the federal funds rate down to around 4.625. Now, what does this actually mean for us? Well, when they cut rates, it makes so the federal funds rate is the rate in which the Federal Reserve loans money to banks, and then banks turn around and loan money to you and I. So when they cut rates, it affects credit cards, it affects some auto rates, it affects any consumer debt that is based on market rates. It also can affect well, I'll get to that in a minute. But so after they cut rates, my phone rings at least 362 times. Hey, they cut rates. What are rates today? Rates are going down. There is a correlation in the federal funds rate and long-term mortgage rates. However, they are not 100% connected. Inflation is the main driver behind the federal funds rate going up or down, unemployment as well. But inflation is what's driving rates up. The higher inflation goes, the higher interest rates will go. So it doesn't mean, as you see in this chart, it does not mean that rates are going to come down. This time it meant 100% to the contrary. And it was because we got better job. The unemployment rate was too low. So they need unemployment to go up a little bit. So there were some numbers that have attributed to this, but I think let's not be mistaken. The policies of the different candidates they're very different. So each candidate has a very different outlook for housing. And I'm not going to get into whose is going to do what or when. I know what a lot of experts say, and some like both. Some of them like both, some of them like one, some of them like the other. So it's kind of all over the place, but just know that the federal funds rate does not directly impact mortgage rates. It's a good thing that they're cutting them. So as I shift gears a minute, I'm going to read some numbers here. The latest housing market numbers from CoreLogic, Case-Shiller, ICE, you don't need to remember those. Those are just national long-term brands that do housing market surveys. In September, home prices stayed pretty much the same, maybe up a hair. And it's really depending on the source, their rounding methods. But year over year, from this time last year, the appreciation rate is about 3.4%. Home prices are still up on a year-over-year basis about 5% over the last year. So the chart you're looking at is the single-family home prices. So this is the median price of a new contract over the last several months. And you can see that even though housing prices, the median housing price has gone up, so has demand. So that's where the inventory shortage is coming from. So prices have tended to run hot in the spring and the summer and really cool off a bit in the fall and winter. I know that, it's almost like it's a seasonal business. We're seeing some of that here too, But we're also seeing that the median home price has gone up even in the slower times. So it's nothing to cause alarm, but it's just normal in real estate. So these seasonal slowdowns are yearly, and but then you see things in the market, like housing market's in trouble, there's coming a crash, etc. Well, data doesn't support that. There's not enough inventory to crash. So we can't, what I mean by that is there's not enough homes for people to purchase based on the number of people that want to purchase a home. So when you see those headlines, keep in mind it's probably just typical fall pattern numbers. So one interesting fact, real quick, home equity, that is the value of your home minus what you owe. So if you owe 50,000, your value is 100,000, your equity is 50,000. But over the last couple of years, that's home equity is growing rapidly. So U.S. homeowners now hold about 17 trillion with a T dollars in equity, in home equity across the United States. The average homeowner has $319,000 of equity. And what's even better, most people can access up to 207,000 of that without it going over the 80% loan to value mark. So anytime you finance above the 80% loan, the amount you borrow divided by the value, you have to pay PMI. PMI is short for private mortgage insurance. And it's an extra cost on the payment each month, but it's also, it insures the lender in case if you were the homeowner, and you defaulted, you didn't make your payments and the house was foreclosed on, it would step in and pay a portion of that balance. So if you know, a lot of homeowners across the country are wondering if it's time to tap into some of that equity, pay down some of those high interest credit cards or auto loans or whatever. So this averages out to about $38,000 per person in the United States. So if you're paying high interest debt, consolidating it with a home equity line of credit, which is what a HELOC is, paying that off, there are a couple of benefits to that, and I'll get into that in just a minute. You know, home equity loans and cash out refinancing, I can't stress this enough, is not for everyone. It is situational basis. I'm going to go through one that I did on Saturday and Sunday for a client and kind of show you an analysis in action. So you ask, what does it mean for the consumer? Well, yes, buyers are going to face higher monthly payments, but there are still smart ways to work the market that favors the homeowner. Homeowners might find that they have some of that untapped equity that they can strategically refinance and take that money and invest it however they see fit. So those are some strategies. So I pulled the most recent Madison and Marshall County market reports. You can see forecasted appreciation is about on the same schedule as it has been. So that says that's a 5-year increase. So if you bought a home today and kept it for 5 years, it would go up 60,000 in value. So that's an automatic 60,000 or $30,000 that you have. So the median household income, 86,000 in Madison County, I'm sure because of the arsenal, and then 58,000 in Marshall County. And I can do these for any county that if you would like to see anything additional. So let's get into some specifics. No matter where you are financially, no matter where you are in the process, I didn't mean to do that. Okay, sorry about that. So no matter where we are in the where you are in the process, no matter where you live, these principles are the same, and I'm going to break them down right now. So we're going to do strategies for home buyers, and you know, these are actually relatively simple, and I post lots of videos on Instagram and really any social media platform educating it every day. Excuse me. But these are the four tops that to me that get you going in the right direction. So number one is financial prep. So one of the best things you can do is, as if you're looking to buy or refinance or whatever, is really focus on your financial foundation. A good credit score is key to it all. It's kind of like cash flow is king. Credit in the lending world, credit score is king. So oftentimes a credit score of 620 or better is needed. But the higher the score, the less the risk, the better the interest rate. So here are some examples. On the screen, you'll see what we call as a wayfinder. And basically, we have technology that we plug the information in, and we say, what do we want to get the score to? And we can choose 620, 640, 660, blah, blah, blah. And if they can, if the algorithm can come up with a credible way in order to boost your score in a quick manner, it spits that out. So this one, the client had I think it was 631 credit score, and I ran the wayfinder, and it spit back to me that if they could pay the Capital One balance down $3,000 essentially, their credit score would go from 631 to 703. Well, the difference in the interest rate was about 0.75%. So it was a huge amount on their monthly payment. Not only that, the Capital One payment's now gone. So they were able to do that, and we are moving forward. Another option is the Wayfinder. I'm sorry, the What If simulator. So along with this technology, we have the ability to do what if the borrower opens a secured credit card and charges $50 on it and then just makes the minimum payment. What will that boost their score to? Or what would it boost their score to if they paid off XYZ, or whatever the scenario may be? And it gives us a potential score increase. Sometimes it's immediate, sometimes it's 1 month. I've had it as long as 12, and I've stuck with them and they closed. So when I say I'm in it for the long haul, that's what I mean. because there's nothing that gives me more positive self-gratification than taking someone that, couldn't buy a home initially and bought a home, no matter how long it takes, 5 years, 10 years, whatever. Here's another little strategy is to boost credit scores is, so the credit bureau looks at the credit limits of credit cards. So if you have $1,000 limit, you want to keep it 65 to 70% below that limit. Keep your balance, that is. So in that instance, $1,000 credit limit, you would want to keep your balance below $700. Once it crosses that 65 to 75% range, it starts negatively impacting your credit score. So what can you do in that situation? Ask for a credit limit increase, pay it down, transfer, however you see fit, but there are ways to do that as well. The next thing, and it looks like I failed to put the slide in here, is not only do you have to have a credit score, but you have to have a budget. What I mean by that is what comes in, it can be handwritten on a piece of paper every month. But if you don't know where your money is going, how do you know what you're going to be able to afford when you find that home that you want? So budgeting is huge. A lot of people overlook this part, the financial preparation, but even if not looking to buy for a year, start now, know where you are so you know exactly the steps you have to do in order to get there. Makes it much more simple. Number 2, getting pre-approved. And I can't stress this enough. If you're looking to buy a home in the next 6 months, you should be pre-approved. There is a common misconception in the marketplace that a lot of our letters state that the pre-approval is good for 60 days. And that is true. The credit report, however, is good for 120 days. So technically you have 4 months to find a home. So you have to weigh the options. If you know you're not going to buy for 2 years, yes, you don't want your credit pulled today for that. However, if you are planning refinancing, whatever, and refinancing is an even bigger issue, but getting pre-approved is not just a checkbox. Most people wait until their real estate agent require one. I got to have it. So going ahead, getting pre-approved, the way I do it is I get all the documents up front, get you pre-approved. That way, when you find a home, all it is really is document signing and ordering the appraisal and title on that property. So it really makes the stress of moving much less. And clearly, if a seller wants a pre-approval letter to make sure that you're serious. So there are many loan officers. Well, I take that back. There's 75% less loan officers today than there were 2 years ago. But even today, I value my word. My word is written on that paper is I'm pre-approving you. Now, does everything go perfectly? No, it doesn't. But we certainly strive, and I take these things to heart. So I want it to go well for the consumer. So when you're ready to purchase or refinance or look at refinancing, the first step is going to be that loan application. So whenever one would be ready to do that, I will get it, I will review it, I will analyze it, and then I will give my professional recommendations. Now, it's up to the consumer for execution. I can't do it for you. But I will guide you for what's needed for pre-approval, including things like income verification, pay stubs, W-2s, bank statements, all pages to the bank statement, an employment history, et cetera. So an application takes care of all of that. So the goal is for you to be ready to act whenever you find the right property or whenever rates hit that target rate, whatever the case may be, to fit your timeline. And I promise you, it can make a difference, because if you're in a multiple offer situation when rates go down, you're pre-approved, somebody else isn't. That realtor has to wait on the pre-approval. You already have yours. You get in first, they accept it. It's a done deal. Number 3 is timing the market. And obviously this is certainly the hardest thing. And the reason for that is because there are so many unknowns, especially right now. So what this is looking at, should you buy or should you wait? And really, a lot of people say that on the news and on social media, should I buy or should I wait? My response is, it depends. It depends on your situation. So even with high rates, and I'm going to show you an example in a minute, I lost my train of thought there. Even with high rates, if you're planning to stay long term, buying right now could pay off. And I'll tell you why. If rates drop in the future, you can always refinance. Most lenders don't charge lender fees on refinances, so it saves you a little money. I guess my goal of this and really consumers in general is to quit looking so short term and rate changes. Yes, there are times that I tell people, as a matter of fact, yesterday, hey, we're not going to refinance right now. We're going to hold tight, but their app's ready. Everything's done. When rates drop, I click lock and it goes to underwriting, and they've secured that rate. So you got to look long term, and you got to look for stability and what brings the most value for your situation. The last one, you've got to work with the right team. And when I say team, I mean real estate agent, lender, insurance agent. We're all a clique. The real estate world is very small, and we all work together. I have preferences, but so do other people. And finding the right one that fits you is important. So a good realtor is going to know the market's competition. They'll know which properties are worth the effort. So it's very, very important to work with the right team. So with that being said, I've got a checklist embedded in here. You can see if I can't put it in the chat. I'll put the hyperlink in the chat, but it is a home buyer's checklist. And basically it goes through a lot of different things about home buying, but there's also a checklist on the items that you're going to need, like those pay stubs and W-2s for. So real quick, as we get closer and wrap this thing up, here are some real life examples. Okay. This is what I want to drive home is it's worth the time to just check. Okay. So refinancing is not just about lower rates. It is about lower rates, but it's also about aligning that with your goals. And let me explain. If you bought a home 5 years ago, as I showed you in that market report, well, if you buy a home today, the forecast is it's going to go up $30,000 in value. So there's no guarantee the S&P 500 would take $30,000 or $60,000 and turn it into, sorry, $30,000 and turn it into 60. So you can also leverage your equity if you're a homeowner, and use that increase in value to do smart renovations or investing, whatever you see fit with that money. So if you have $100,000 house and you only owe 40 on it, you can borrow that money, take that money and buy another house, which can pay you rent. So back to this refinance here. So this was one I did a few weeks ago. And this is a tool we use called the blended rate calculator. So if you notice, they've got a 3.75 interest rate, but you add in all the other, rates, and the blended rate is 6.8%. So this ended up saving this consumer about $1,890 a month. So it was very worth it, even with the interest rate on the home going to 6.75. So that's one example there. This is another example and a prime example of why it's refinancing is not just about lower rates. So here's another, here's an example of kind of my analysis. I sent this email and this is just snippets of it, but and I tried to walk them through systematically through each step of the process. So what they were doing is their rates going up, but they're paying off every one of their credit cards and their house, taking cash out. So right now, their total monthly payment is $4,000. Their monthly outlay, in other words, all their bills, monthly payments going out is $4,000. Well, their credit score is below 720, but they're paying off one of the credit cards that is going to increase their score. So I gave them the option. On the next page, I said, if you get your credit score fixed first, these are your options for FHA and conventional. But if you notice here, their current payment right here, $1,882 a month. All right. Well, it's $1,828. I'm obviously dyslexic, but the total payment goes up. But if you'll notice, they're only going to be paying $3,224 instead of $4,000. So again, rates going up, it was advantageous for them. And then I also included in my analysis, okay, in 2 years, let's say we refinance, this is what you're going to look like within 2 years. Total payment on a conventional loan, rates have come down and credit score has come up. So I kind of gave them, here's what it's going to be in a couple of years once we get it done. So out of pocket, they are paying it through the loan, but they're not paying anything out of pocket. So a lot of myths there that are misconceptions because it's just not truthful. So using the home equity to invest for me has probably been one of my greatest sources of wealth building ever. And that what I mean by that is I'm by no means wealthy. I mean, wealth building is my net worth has grown, and mostly because of real estate. I'm very involved in rentals. So I've taken on multiple occasions the equity from my home, taken a HELOC, used that money for down payment on a home that now is paying me rent each month. So that money is just not sitting there. And the thing with that is obviously the rental market is growing because there's not enough inventory. So that's just another way to utilize real estate in order to build wealth. So we've covered a lot from market insights to actionable steps, but just knowing isn't enough. If you're seriously considering buying, refinancing, whatever that may be, just know that whether I do the loan or not, I'm here to help. I love educating people, and I've made a lot of mistakes over the years, and I want to make sure that people don't make those same mistakes. And with that being said, I'm here to support you, again, whether I do the loan or not. Now, with that being said, I'm going to do everything I can to earn it because that's how I feed my family. I don't get paid a dime until the loan closes. So if you're considering it, and just know that I'm here to support you. I want to educate you. If you have questions along the process, I don't care if it's 2 years from now. It is what it is. But schedule a meeting. I have a link that you can pick your time that's convenient for you. I will create a personalized plan just for you. And yeah, so I love real estate. I love using mortgages as part of a overall wealth building strategy. If you have a financial planner, I really like to talk to them because it needs to fit within their financial plan, and not enough people do that. I'm willing to take the time. So thank you again for joining. And I have one last thing before we go. Are there any questions? Somebody's got a question. Well, all right. Well, again, thank you so much. You need to act. Let's see where you are. And let's create a financial plan with your mortgage that increases your overall wealth in order to buy more homes, invest in more properties. If you don't want to be a landlord, that's fine. There are other options, and we can discuss that too. I send out a weekly newsletter, and in that newsletter, it's not a spam letter. It's not I really try to put tangible information in there for free that you can use. So with that being said, take a moment, snap that QR code, and then sign up. For my realtors, I give anything from scripts to actionable items that I may be doing or have learned. Look, I'm part of a multi-million-dollar mastermind group and coaching program, and I learn a lot, and I want to share that with you. So scan that QR code. I'll leave it up for a few minutes, and thank you again for joining, and have a blessed evening.